Folks, I don't know about you, but sometimes I like to look at real estate markets, really high priced markets, see what's going on. In order to do that, we bring on a top 1% agent, the one and only Beth Traverso, who's going to show us numbers from Seattle/King County and see what's going on in that hot market. How you doing, Beth?
Hi, I'm doing great, Michael. Thank you so much for having me back here today.
Absolutely. So it looks like we're going to go through December numbers. Let's give full credit to where these are coming from and
Yes.
let's
So
dive in.
data compiled and published by the Northwest Multiple Listing Service, which is basically our MLS in our area here. So it's straight from the source itself and totally unfiltered. So, well, I've got it for residential for King County, and that's it. So thought we'd take a look at it because there's some really interesting things there and a little bit behind the numbers too that I think people might think is a little interesting too. So let me just see if I can get this screen shared here. Are you seeing that?
It's coming up. There
Okay.
it is.
Yeah. So check this out. So look, as far as all King County down here, we can see that pending sales are down 26%, which is actually an improvement over what we saw last month, where pending sales were down further than that. And then closed sales we have down 42%, which may seem really striking. Some of the areas on the farther flung areas, like the North King County, 50% down. We saw this back in July. So for me, it's just a kind of a little bit more of the same. What I've been seeing is that the pending sales are the reduction in pending sales is starting to diminish a bit, which makes sense to me because we saw inventory dwindle down a lot over the holidays, which is typical seasonality where people don't list their house during the holidays. They tend to wait until the springtime at that point or after the holidays at the least. So some of these, if you look at some of these percentage of active listings, there's some numbers here that I don't think I've ever seen. Like look here for under 540, which is my area where I live in my buy box.
Okay.
1,018% increase in active listings. What? But then you look and you go, well, it's 11 listings last year, and now we have 123 new listings, total active listings this year. So 1,018 increase in total inventory, but it went from 11, and this is a huge area. It went from 11 to 123. So still quite low, but
this is really weird because if you actually go to the next two columns, I actually think the next two columns are even more telling to the left.
Oh yeah, these ones over here. Yeah, the new December 2021, new December 2022.
So let me translate, see if I know what that means. Basically, new 2022 for 540 says you had 37 basically new listing contracts signed. That's what that means, right?
Yes.
So last year, you actually had 55 new listings. So you were adding more inventory, net new inventory last year than this year. That correct?
Correct.
However, this year, inventory is stacking. That's what that means, right? So inventory is
moving off the market, more holdover.
Right. This is where I think we are going to start to see some of these fall off because of wish pricing, right? They signed a contract 90 days ago at some number, and they're basically telling their agent, Beth, hey, if you get my number, I'll sell. If not, I'm not selling. And a lot of those are just cancellations expired. That's an expired waiting to happen.
Right.
Because,
I've looked to see, January 1st, I always log on to see how many expireds we have because that tends to be a day, like the biggest day for expireds. And there were some, but it wasn't like a wave of expireds. But I think what people do is they tend to just cancel them and take them off the market before they expire. Usually they don't want to be besieged by call centers and people knocking on the door, etc. They tend to want to avoid that. So we have seen some,
Yeah, so if we stay at 540, because I'm just going to go across those lines because it's so much fun.
I know, right? So we're right
here. So
if
if you're in the pending row, you're basically pendings are down year on year, so 20%. That makes sense.
Yeah.
And that's another reason why inventory is stacking. So that ties together for me. Then closed transactions, that really is telling.
Down 42%.
Yeah, so that just means inventory.
And we're doing better than some of these other areas around here. Some are down 70%.
Right. Then you look at price point. So your pricing is down, right? 1-3 versus 1-4.
Yeah.
And then most importantly, months of inventory. It's shocking to me that months of inventory is only 2 months when
Hmm.
your inventory is up 1,000%.
I know. Well, I went and looked at December 2021 numbers to see what are we comparing with here. And I saw December 2021, we were at 0.2 months inventory.
0.2. Oh, that
0.2, and Area 540 went up 38% in December of 2021 year over year. So it went 38% in that month. It went up 38%, and now we're at 15% down. Where does it say that now? See here, so East Side 15% down,
got it.
and where last year it was 37% up. So we're still up significantly if you compare to 2020, for example. Not a bad rate of appreciation overall. And in real estate, it really is about time in the market versus timing the market. And I
Sure.
think this is a good example of that. But I think some people could look at this and say that the sky is falling. And for me, it's
For
like,
sure.
well, what I'm seeing is with somebody who's been right here in it, in the thick of it for many years, I can say that last December was when we saw this, the fire was lit and everything exploded actually before the holidays were even over last year. I know I had a listing that still stands out in my mind that I listed at about 1.4, which was right around where recent comparables were. And it ended up selling for close to 2 million. And I was not prepared for that at all. So
Wow.
that was where we were off to the races, and it continued on that track for a good 2, 3, 4 months. So I think when we start seeing, this is the first month that we're seeing, comparing these year over year numbers, that we're seeing that difference between that level of
Yeah.
intensity and total unsustainable just explosion in the market,
Yeah.
to now where we are.
Let's just call it what it is. That was stupid.
Yeah, I was thinking insane, but yeah, stupid works too. So
Yeah, I'll
pick
be
your
more direct.
adjective. It
Yeah,
was
pick
not
your ad.
normal, that's for sure. So
Yeah, this is why it was actually our conversation. So I had 12 real estate predictions for 2023, and one of them was we're going to show negative year on year for the country 4 months next year.
mhm.
And it was because I think we had 4 months of stupidity. We had
Yeah.
a blow off top, and I think we're going to show 4 months of just stupidity coming back. So it's
Yeah.
going to be interesting to watch.
So
So
another thing I'm seeing, I 100% agree with that, and I'm ready for that. And that it's going to make headlines that sound like it's a complete disaster, housing
sure.
calamity happening. But for me, what we're seeing is been pretty consistent since the fall through now. I haven't seen much change as far as transactions were down. They're still down. Prices seem to be relatively stable where I am. Now, again, I'm only speaking to my market. I'm not speaking to other people's market. And I'm not telling anybody what they should do for their own purchasing decisions. But what I'm seeing is that things have been pretty stable between the summertime and now, with a little bit of fluctuation, but nothing nearly as extreme as what we saw in the first half of the year.
Yeah.
Another notable thing I see here is for the city of Seattle proper. They're up still 5% year over year, where the others are down, like East Side is down. But then when I was looking at last year's numbers from December 2021, I saw that it was kind of the opposite. So the East Side had the 38% year over year appreciation, and Seattle had let's see, where is it? Seattle had less. So the it's kind of consistent, where of course they didn't shoot up as much and they're not correcting as much, and I'm still
You know
seeing
what?
that.
You know what is the most wild thing for me to think about as I look at all these numbers? It's that last column. We have
Just months of
always heard,
inventory.
we have always heard and said that a balanced inventory is about 5 months. Let's assume it's actually 4 months, right? Because information travels faster and yada yada
Right.
yada. So let's call it 4 months. You're still half that in all of King County,
Right. And it's
even with
interesting that there
all of
can
this stuff.
be all of these changes in prices and transactions and still only have that much inventory.
So I want to make sure I say this correctly. So in all of King County, meaning the bottom row of this spreadsheet,
Mm-hmm.
your active inventory is up 376%.
Yes, it
Your
went from 395, which this
right.
is an area with about 2 million people. So think about that. So 395 listings went to 1881 from Europe.
Even with that 376% increase, you are sub 2 months supply.
Yep. We were at 0.2 month supply last year for December 2021. I've got that chart pulled up too. And we had, yeah, that was when we had the 395 listings for the entire.
Wild.
Yeah. And that's what, and then you have these, at that time, you have these 3% interest rates and everything else going on, all the stimulus, all that stuff that you talk about all the time going on. And it's just like matched to the flame and just,
Poof.
so it blew up. And this
Yep.
is when it blew up, was in December last year. So now that's all in the past. We've had a very significant correction. And this is where we are now when you compare that. And I think that January numbers are going to be similar, because January is even going to be, I think, more extreme as far as the spread on a lot of these numbers.
This is what I mean, because one of the things we're going to do in video number 2 is talk about the January effect for your market, because you're telling us all the time that's when it starts in your market.
Yeah.
It'll be very interesting, because I'm going to call it right here, right now. All of King County will show a negative number for price appreciation in January. Right today, it's positive 1.8. I think it goes negative next month, but by July, it's positive again. That's what I'm calling. What do you think?
Yeah, that makes perfect sense, because that's what we, because of this surge we had. Because when I was writing offers back in January of 2022, we knew there was a formula. So it was basically, you offer, we usually do escalations, but 20 to 30% over list price, whatever that list price is, you go 20 to 30% over that, waive all contingencies, throw a huge non-refundable earnest money. I've seen non-refundable earnest monies as high as $500,000, where buyer gives that to, not escrow doesn't hold it. It gets released to the seller before closing, which is
released, gone,
risky.
gondo,
extremely risky.
Yeah.
But when I'm the listing agent, if a buyer wants to do that, okay. And that's definitely going to help get their offer accepted. But that's what it took. It took people going all out. And not everybody has the ability to do that. So a lot of people were just left to just wait. So
well, here's the big fight.
Now those people, it's their time and they have opportunity now in this market.
Here's the big question. And I just don't know the answer. Do you think all of King County over the next 6 months could possibly get back to 3 months of inventory? Is that possible?
It's possible, but I don't predict it.
Not probable. Possible, but not probable.
Yes, exactly.
Yeah, because I think we're going to talk about that in video number 2. This is wild to look at.
Seeing things shaping up so far, which we'll talk about in the next video, like you just said, is that I don't think we'll get to 3 months inventory, but I think it's going to kind of keep along kind of steady where we are, my guess.
Well, folks, if you want to sell or buy or just network with an amazing real estate agent and investor, Beth, how would they follow you?
Hi, yeah. So the best way to do that would be to reach out to me through my website, BethTraversogroup.com. I'm also in the Facebook groups, or just message me on social media. Happy to connect with everybody. So
thank you so much.